As the turmoil continues, investors are turning to German bonds, or bunds as they're known, as global trade turbulence takes hold. The 10-year bund moved opposite to price, and you can see how it's performing. It's near its lowest levels in more than a month. Last month, German lawmakers abandoned a long-standing government borrowing limit and ramped up government spending. The country's economy is largely export-driven, leaving it heavily exposed to tariffs. But at the same time, of course, there is this great increase in defence spending. The Finance Minister Jörg Kukies is with me. He joins me from Poland, where you've been at Finance Ministers meeting. Minister, it is good to see you. I'm grateful, as always, that you've given us time tonight. The current situation of navigating these higher tariffs in an economy that is very susceptible on exports. I know tariffs and trade is the purview of the Commission, but you have to deal with the economic realities of them in Germany itself. So how are you preparing?
Well, we are supporting the Commission in what it's doing. On the one side, indicating to the United States that we are willing to negotiate and that we're even willing to reduce tariffs to zero on our end if the United States also goes to zero. So all asymmetry talk is gone if both are at zero. But at the same time, we're also providing input if there is no result in the negotiation to react effectively with countermeasures.
Everybody knows it's really the non-tariff barriers, the rules and regulations. The US would say there's too many regulations. US's companies are being, the VAT, for example, you know this backwards, upside down. The VAT rules, which they say are unfair to US exporters. The agricultural rules on GM crops or hormone beef. Those will, if the US goes heavily on those, this would be very difficult for Europe.
Well, I mean, the VAT example shows that the argument simply isn't sound. I mean, the VAT is being paid both by European companies and consumers, as well as by American companies and consumers that sell into the EU. So everyone is treated the same in a level playing field. So this has nothing to do with tariffs. It's a form of a sales tax. So in that sense, the VAT argument can be discounted completely.
On the question of the role in a post-tariff, I mean, I think everybody would accept that the trade world post this Trump administration will be different, however it looks. Where do you see Europe's new trading relationships being?
Well, on the one side, of course, with the United States, our diversification and de-risking out of China has now led the United States to be our biggest trade partner in the world, and the country that I'm currently in for the finance ministers meeting, namely Poland, being a larger export destination for German goods and services than China. So in that sense, we have been diversifying out of China quite a lot. And in our view, the European Union should become very aggressive now that the United States seems to be wanting to get more restrictive on trade, to embrace the world on zero tariffs, on trade agreements, reducing non-tariff barriers to trade.
So I see you've had looking at doing deals with the UAE, and I've seen this, that, and obviously a closer cooperation with the UK is very much on people's minds. But it's not going to be difficult. Sorry, it is going to be very difficult. And do you think now you're going to see a recession in Germany, a longer recession, perhaps I should say, in Germany?
Well, first of all, I mean, the UAE and the UK are very, very important, but please, we should also think about Indonesia, India, Malaysia, Thailand, you name it. We should think about Nigeria, South Africa, big African countries. We should immediately ratify Mercosur. The treaty is already signed. So in my view, the European Union and the commissioners said a lot about this today, and that they're willing to do this, should just embark on a big sales pitch to the world saying, please trade more with the European Union. We will facilitate it by lowering tariffs and non-tariff barriers. Because to answer your question directly, one of our largest economic research institutes just told us that if the tariffs stay in place as proposed on 2nd of April, we will lose 15% of our export volume to the United States.
I suppose that speaks for itself as to what the effects will be in that regard. Now, I'm just going to take my luck on this one, Minister. So the new administration or the new coalition, the SPD has got finance. Have they knocked on your door and said, Jörg, please stay, we need you?
Dear Richard, you've asked me this question twice already, and I've evaded it successfully, so I'll evade it a third time. The personnel things are being discussed at the moment, but they will be announced to the public in early May. And you'll be one of the first to find out.
Yeah, all right, I'll leave it there. I'll leave it there. You've got enough on your plate without me haranguing you.
I'll call you.
You've got.
And if I don't make it, I'll become production assistant for Quest Means Business.
You got the job. You got the job. Good to see you, Minister. Have a great weekend. I'm grateful, as always, that you found time for us tonight. Thank you.